Good evening, everyone, and welcome back. I'm Kate from Alpha and Omega. So today I'm going to do every week we analyze macro analysis, flowing, and how that affects currency, commodity, and indexing. Music's a bit too loud. Today, particularly interesting is we have seen a bit stronger move on oil for quite some time. So we will discuss why oil is rallying, whether the move is sustainable, what it means for currency, what I'm watching next, and also I will review my positions openly. The biggest story this week has been oil. Oil isn't rising simply because demand suddenly exploded. The main driver has been increasing geopolitical tensions. When traders become concerned about supply disruptions, the market price in risk premium. So let me share some screen. I'll share entire. Let's go through our trading wheel just to make sure. So today is Friday, Thursday, Wednesday, Monday, Tuesday, the whole week. It's just all rallying up. So I want to explain why gold going up because as I mentioned, it's geopolitical risk. And I want to review my trade. I thought this is actually downtrend. Last month, I will give you my reasons because before this Monday come in, my macro kind of like pointed oil is neutral, didn't have big direction, just purely neutral. So I see a big gap here. I thought this might actually remain the downtrend. Of course, I was wrong. So let's look at the whole structure. So now this is all because of the geopolitical risk. You can find out on internet what is the risk about the oil, why it's pushing all up. All you need to just key in the internet, you can see all. So I'm not going to explain, but we know this is not due to supply and demand. It's purely just geopolitical risk. So this move is called risk premium. So I wanted to highlight certain level 92. This is the oil struggling here, mentoring, and trying to break this could not. And this level to me is pretty critical because how much they have struggled here. So the question is 92. Will this become continuing down and then retest the breakout level, which is here? So I enter short here, but with very, very short, very, very small lot. But I got wrong purely because my macro analysis at the time last week is pointed oil neutral. That's why we can get wrong. Market can have sudden events that take you for surprise, and in this case you got to manage your trade. What would you want to do? Because normally if the market actually reverse, they don't really reverse suddenly without retracing it back. So because my position are rather quite small here, so I decided to do a bit of cost averaging. Of course, I have to admit wrong if this level is broken. True enough, we met some seller coming in, but today is Friday. So, and we do not have much news this weekend on the calendar. Really quiet Friday, nothing special. So just my position now, I actually shorting oil here, cost averaging until 92. So now I pretty much break even. My break even should be around 87. We will see whether the geopolitical risk will quiet down. I will pay more attention on what's going on this geopolitical risk event. So now, last week, based on my macro intelligence system, I do call because my system have been indicating cautious risk on, or sometimes switching for cautious risk on to a cautious risk off, purely because of the liquidity stress. So I wanted to explain to you what does it mean liquidity stress. So my macro saying that the credit now are very stressful. Big investor are actually not willing to spend their credit easily. And plus the policy is tightening, means high interest rate. So everything combined, we actually have potentially risk off event, but not in a drastic way, because I haven't really seen defensive currency like CHF and JPY actually being bought on. But we can start looking. And I want to show you one more thing is I'm gonna show you one more thing on my drive. So I told you I have some oil positions which I have to managing it out because I thought this is a downtrend, but the geopolitical event that happened in Middle East that caught me surprised. But this whole move is just purely risk premium. Risk premiums can easily being removed if the geopolitical events kind of quiet down. In terms of supply and demand, we actually before the problem with the war, Iran war and Iraq war, whatever the something going on happened in the Middle East, we always actually have surplus of oil. That's why we are actually on a short down prior this one we actually on a downtrend until this Iran thing come back. So all this whole move is a risk premium move. Now this is a crucial. So my play on this one purely on a bigger picture is very simple for me. So it's still on a bigger picture. We hasn't really break the lower high yet. So this is a weekly time frame. We hasn't really break this yet, right? So I'm remain with my position until 100 level or 95. This is key level. I will constantly pay attention to what happened in the Middle East about all this geopolitical risk event. But I also want to show you separate thing, which is my macro analysis. I want to explain what is liquidity stress. At the moment, my dashboard is saying stronger currency is still USD, weaker currency is still Kiwi. USD at the moment is actually fighting between two forces. What's the two forces? Safe haven demand, because and also the changing interest rate expectations. So now they're expecting, because the CPI cooling down, so they're expecting Fed might cut rate. So that will weaken the USD. But because of the safe haven demand of the liquidity stress, so USD is being supported. That's why USD is bias is neutral. And now today we don't have any air trades set up. I mean, I don't have any trade that have great advantage, but things that we should pay attention is so let me pull out another of my sheet so that I can better show you. That I want to give you a summary of what happened on the macro level. So, okay. So this is today. I just run this, so it's still broadly risk off. So we have commodity supply shock. So Today market is actually best classified risk off. Supporting evidence like what? Like equity have dropped 1.21% on S&P. Wix rose. Wix is the volatility. This one have rose 12.38. This is the credit. Um, Credit fell. So remember I said liquid stress. So credit dropped. I mean people is not willing to spend. Credit drop. Secondary commodity supply shock. However, high yield spread did not widen. So what is high yield spread? This is a high yield spread. Not this one. No, this is real yield. The high yield spread is. Yep, this is a high yield spread. It's not um, going up. When it's go up, that means we really need to be cautious about risk off. But now not the case yet. So you're just maintaining, can sell bounces if you like to trade S&P risk off. So this is my macro. So this week oil has rose 5.18. So I just want to let you know, sometimes even with the best analyzed system you have, you can still need a very good risk event. Do not have no plan what if your reading is wrong. I just want to reiterate what I talked about last week, which is I have a trade called AUD JPY. I'm going to show my real account rather than. So last week, same thing, my macro already pointed to cautious risk off, not fully risk off. And AUD been very sensitive to risk on and risk off. So last week, I actually thought this resistance will not be broken. And I shorted somewhere here, as you can see. So now at the moment, I was down, but because my lot size is rather small, 0.01, and I do think in the bigger picture, I haven't really still think this is just a sideways market, probably have triple top. So he hasn't really broken my my chart pattern yet. So I haven't really taken any losses because I wanted to see how this week close. And then whether there is a follow through candle next week. If there is, and also the market sort of coming down, wicks dropping down, and AUD people start beating it up because AUD is risk on currency. So we will see. So I'm actually still holding my position of short AUD JPY that I called on last week. So I am in drawdown now. Two positions. Still hasn't really take up my ultimate level 115. Will POJ suddenly do some interventions? Most likely, but we can't just bet on what if. So I also mentioned in the beginning of this video saying I want to tell you what is the impact of oil on euro. Euro normally weaken when oil is strong because they are import heavily on oil. So yesterday we do have a euro rate, cash rate, but it's uneventful because it's meeting up expected 2.4, keep the rate unchanged. So market doesn't really, it sell off quite a bit and then now just kind of like forming a base here. But as you can tell, I sold it here because oil is very high price and euro normally have negative impact on that. Plus USD are quite strong. So I actually shorted euro here, thinking there will be a follow through candle next week. So but I do have a stop. This is a very tight stop considering because I just shorted here. I don't want to carry it. If this is a weekly open 1.427, if you go to weekly, and you point your bar here, you can tell the open is 1.14271 based on the broker I use. So I do put a stop there because if this candle closing above this, then we have pretty good bounce on this support level. I am not going to hold this trade. So this trade is technically betting on continuations of the downtrend. And I can see a lot of effort trying to break, good efforts, but doesn't have follow through, seller just coming in. So I just took this trade. Reason one is Euro have just announced kept the rate. Market doesn't see that as bullish. No bid coming in. Oil going up. Euro normally kind of like significant impacted headwind for Euro if oil is actually high because they are main importer. There's two reasons for me to short this one: strong Euro dollar, strong USD, strong oil price, negative for Euro. So I shorted it, but I don't want it. If I have put a stop here because if this weekly open, if USD can push this price up there, then weekly will have this wave will actually point it up. So that's not what I want. That's why I actually putting a stop there for my short Euro dollar. Just entered it today. Might will carry out to the next week because I think the momentum should continue downwards. I also mentioned last week I have a position on long silver, and I wanted to discuss how I salvaged the trade. I ended up coming out with a little bit break even. I didn't make money even now. Silver is bending really high up, but I want to go through this trade as a learning. So my goal is review the trade. What can we improve? Even if with the macro analysis, you can still go wrong. Sometimes it's a timing entry. So let me go this. So this trade was token short, long silver around 58.50, somewhere there. This was last week. I can show you the trade. But USD very strong, so I got crashed. And then this is show you it's Friday. So I done it on last Friday. So yeah, it's here. So I longing here. I thought it's a higher high long. So I longed it somewhere here on Friday, last Friday. That's why trading Friday is really so. So I thought this is a higher low long. So I longed it somewhere here. That USD come up really strong. It smashed me, and then it's Friday. So I actually have to hedge it because I do not know whether market will gap down on Monday or not. I don't want to take the risk, so I actually hedge it. But when Monday come in, there's no gap down. Market formed this dodgy on Monday. I took my hedge off and I playing a long trade over here. So I coming out with a bit of break even here. So that's overall my silver salvage effort. It's trading weekend sometimes make me I seldom trade Friday, but for the sake of doing this live stream, I choose Friday because I work in Australia, Sydney. I couldn't afford to sleep in late and do the late night show on other day except Friday. So that was the silver trade that I done. I longed it here, but I got smashed by strong USD and silver just deep down. I do a bit of hedge on Friday, carried over the weekend, and then unhedge on the Monday. So there's no news that can potentially put silver continue down. And moreover, with my risk off sentiments, I'm more bullish on silver in long run than shorting them. So I unhedge myself, salvage myself. If you ask me, can we long here? Yes, because the next thing I want to talk about is the oil impact on gold. So oil impact, when oil is high, it impact inflations. Everyone know oil is gold. Sorry, when oil is expensive, inflation's impacted. So gold, some people thought is anti-inflation or hedge inflation. So some people will buy gold when oil going up. So there's one thing, but because gold also pair with USD, if USD is strong, then gold can come down. So there is a two force competing each others. Moreover, gold is inverse relationship with yield. When yield is high, then gold normally go down. That's why now the gold overall is actually neutral, doesn't really have directions. But because it was sitting in a major support level somewhere here, so if really wanted to trade, and when US market came in, we will see whether this level can be broken. If it cannot be broken, it give me this, we might actually consider a bit of long. But again, this is Friday. If the market doesn't go what you expect in terms of technical analysis, so please be mindful. Do not carry your trade over weekend if you do not know how to manage your risk, especially if you have a position that could not take any volatility movement, because this commodity, they're all very volatile during weekend. So be mindful. And I think that's it for today. Hope you enjoyed this. I just want to reiterate that no one have 100% winning, no strategy. The most important thing is manage your risk, preserve your capital, and then position ourselves for the next trade. And I'm if you want to ask me, am I still going to hold my oil short? Yes, I'm holding. I have explained to you why. My thesis is this is just a risk premium move on the oil. I do think that the bigger picture of the oil is I have drawn on a trading wheel is still a downtrend. So you can see I have multiple positions shorting now, and average is 84, my break even. So I will see whether this will come up, but I don't think I will come up quickly. It probably have 2 to 3 weeks before I can know whether this is a winning trade or losing trade. So guys, enjoy this. Welcome to leave any comment if you like my live live stream. Good. Have a good week and bye.